Hello again, today is Friday, May 10th, 2019, and today I just wanted to kind of remind my audience about the events that occurred over 74 years ago in Berlin in 1945, the victory in Europe Day, the victory over the Nazi Germany by the Allied countries. Here in the United States, it's not celebrated as much as it used to be. Celebrated, for example, in Soviet Russia, where I come from, and I lived in Soviet Russia for 14 years of my life. There, the Victory Day was very important, and the reason probably is because just the sheer amount of suffering and sacrifices that the Russians have made over the World War II years is just enormous. Some estimates death, in the Russian population in the 20 to 40 million people dead. So I wanted to remind my audience to honor the sacrifices that our grandparents have made, and both of my grandparents participated in the World War II. So please do remember what happened back then, and you can see the amount of destruction that World War II brought to various countries in Europe and in Asia. Also, there's now estimated of about 70 to 85 million people dead from various combat-related activities, but also from just outright genocide and destruction of humans. So please do remember this also. Victorious Russian troops celebrate in Berlin, and in Russia and in many European countries the Victory in Europe Day is actually celebrated on May 9th. But this is a very kind of good shot, and it reminds just how much sacrifice they made and how happy it was for them to finally see the end of the war. Of course, Allied commanders, Dwight Eisenhower, George Patton, Georgy Zhukov of USSR, and Bernard Montgomery of Great Britain, all great commanders of World War II that contributed greatly to the defeat of Nazi Germany. And of course, a famous shot of United States sailor kissing a girl at the World War II, end of World War II. Notice that the end of World War II in Asia World War II in Asia ended actually in September of 1945, and when we get there to September, I'll also mention the campaigns in the Pacific, which were, to us Soviet-brought population, surprisingly bloody and surprisingly underreported in the Soviet Russia. Okay, let's continue to our presentation. So today is May 10th, 2019. Again, please hit the like button and subscribe to this channel. Stocks pulled back towards good support levels. We'll look at SPY, QQQ, and Dow Jones. I think the bottom in action is already unfolding. We'll look at the E-mini futures. Chinese stocks pull back sharply. I think this might be an opportunity, and we'll look at some of the mainland Chinese stocks, ASHR. We'll look at the current deal for Chevron, Occidental Petroleum, and Anadarko, and we'll see if Warren Buffett is correct. Junk debt moves in lockstep with stocks. This is confirming bullish posture for stocks. We'll look at investment grade corporate, or rather we'll look at investment grade treasuries. Obviously they're investment grade, and they're predictably reacting to a pullback in stocks. We'll delve into dollar and see if it's reversing. We'll briefly touch upon natural gas, and there is not going to be a gold or oil coverage because we have a couple of trades going, but we'll finish up with Bitcoin as it breaks out. Alright, so let's look at S&P 500 futures, and here they are. So to me this looks like we're already trying to bottom here, and you can see the green line, the blue line, the red line, the yellow line. You can find out more about these lines by going to MasterChartsTrading.com. These are the indicators that I use, and this I wrote the indicators myself, and you can actually have them on your chart. This chart shows a potential couple of hammer-like candlesticks right there on the 9th of May and another one today on 10th of May, right around the green line. Now this is a decent support level, and I think it could hold. In fact, I've already sent several alerts to my subscribers, and we're buying various stocks. So here is that S&P 500 ETF SPY as it appears to be bottoming around the green line. Overall, obviously a bullish chart. This pullback is a normal kind of correction within a bigger uptrend. The uptrend is obviously up. QQQ, same thing, attempting to bottom around the green line after it hit fresh record highs, and actually also continuously fresh record highs. A pullback after a move like this, and you can see a move like this from December lows, we can actually measure the move. You can see how big this move was. And this is an average of 100 stocks, 33% move higher. So yes, absolutely, a pullback of some sort is normal. What we should not be doing is we should not be looking for a top-in pattern. This is obviously a bullish chart, and we should only be looking to be buying, to get long. We should not be looking to sell or to short. Dow Jones broke below the green line. This means nothing, I think. I think if we even get to the yellow line ever, maybe then that's when we are going to be considering a bear market, which is currently just really far away. It's about at least 13% down before we can start thinking about a bear market. Right now we're just simply looking for a pullback, and then we're going to try to get long, to buy. Here are the Chinese shares, SHR, and actually these two alerts, one on 5th of March, the other one on 25th of March, were both successful. We had a very nice gain. Now again, with all this trade war talks, obviously stocks are, especially Chinese stocks, are taking a beating. But overall, I think this is a potential opportunity because it's a deep pullback of a bullish security, and a deep pullback of a bullish security usually spells an opportunity, and we should be looking to be again buying, not looking for top-in pattern. If or when we break down below currently $23 for this particular ETF, then maybe we will start thinking that we have turned around into a bear market. But for now, I don't see this happening currently. Let's look at this recent deal between, or rather a bidding war for assets of Anadarko Petroleum by two really huge companies, Chevron and Occidental Petroleum. So this is showing my thinking about how I analyze stocks. Now, I wasn't really paying attention to this particular stock, but recently in the news we see all kinds of news about Anadarko Petroleum, and I kind of just was interested and I looked it up, and lo and behold, there's the breakout on 16th of April. And again, I knew nothing about this stock, really. I knew nothing about the deal, but if I was trading it, I would be buying it right there on 16th of April, maybe a few days later, and you can see how much it popped afterwards to fresh highs. So a buyout is obviously a good thing for Anadarko because it will improve their bottom line. Money is flowing towards them. Now, let's look at the bidders, and here are the bidders, the Chevron, and the next one I'll show Occidental. So this chart Notice we had 3 up arrows here. These are actual alerts, and you can see that all of these 3 arrows were successful. All of these 3 trades were successful. Latest trade, we actually still have it open, was sent on 22nd of April. Hasn't yet reached its target, but notice that this is a bullish chart where the price is pushing towards highs, not pushing towards lows. So if I was trading this chart, I would only be buying. I would not be selling or shorting it. Let's look now at Occidental Petroleum, and here's Occidental Petroleum, symbol OXY. Again, I was not trading this chart, so this downward arrow simply shows where I would be shorting it. And you can see that these indicators are actually drawn in real time. You can see that they're drawn in real time, and if I was trading it, potentially I would be shorting it. I wasn't really trading it. You can see that now Occidental hit a fresh low. Now, Warren Buffett is actually injecting some of his money into, I think, $10 billion into the purchase of Anadarko Petroleum by Occidental. So there is a complex deal going on. But looking at this particular chart, I would not be buying Occidental, that's for sure. I would be looking to buy Chevron. And, for now it seems that I'm correct. I think the Chevron will continue higher, while Occidental looks set to continue lower. So go figure. If you look at junk bonds are moving higher. This is showing good appetite for risk. Again, stocks and junk bonds move in lockstep together, and therefore it would make sense for them to continue higher together or to continue lower together. And you can see that the stocks bottomed out around the same time as junk bonds, around late December, and it went on just a tremendous run. Currently we're pulling back a little bit, and notice where the price action is bottoming around the green line. So again, this is showing, in my opinion, good appetite for risk, and I think we should continue looking to buy stocks and junk bonds as well. This is TLT treasuries. This is kind of like the opposite of stocks. This is very kind of low risk proposition, but they are still, tradable securities. For example, this is TLT, and I myself actually own it, so I opened the position right there on the 11th of January, and I sold about half of my position here in March. Another alert was sent to my subscribers here on the 4th of March. It was just a beautiful move in our favor, an immediate move in our favor. Currently, stocks are pulling back, investment grade bonds are moving higher. So this is a normal behavior. Investors try to position themselves in the best asset class, and if investors are currently feeling a little bit skittish, they would rotate some of the money into bonds, and this is what happened. I think this is what's happening currently. Some of the money is being rotated into bonds. We do have currently a bull market in both stocks and bonds, so I'm expecting a breakout higher for TLT. Look at the dollar index, and here's DXY. So I wanted to show, to highlight rather, the distance between, you can see this yellow, red, blue, and green lines. Again, find out more about the MasterCharts Trading. But you can see that the narrowing of the trading range, and even as close as April of this year, the trading range for this particular security was 6.2% or 562 points. Then in May, in the beginning of May, you can see a narrowing of trading range to 4.26%, and now in mid-May, yet again, May 10th right there, we see a narrowing of the trading range even further. So right now it's 3.7%. What does that mean? This type of behavior happens quite often when a trend change is to be expected, I guess. So when I'm looking at this chart, I'm seeing that even though the dollar currently is obviously in the bull market because of these are fresh highs, to flip the switch and for the dollar to start making new lows, lower lows and new lower highs, I think we need to close below 95, which is currently at, which is a red line. So if that happens, I think the dollar would be in a downtrend, would become in a downtrend. And by extension, the components of the dollar, for example, euro, British pound, Japanese yen, would also flip the direction. In other words, currently, you can look at euro versus US dollar. You can see euro versus US dollar at fresh lows. If the dollar turns around, that means euro will begin to gain. And notice the same thing for euro versus US dollar, the currency pair. Even as not that far as just March of this year, the distance between the yellow and the green line, the trading range was 7.28% or 828 pips. Currently, it's almost half of it, 4.4%, 495 pips. So in other words, right now the trend change for euro could happen much easier than it was just a few months ago. All the euro needs to do is just rally towards the blue line, which is currently at 1.157. If euro manages to get up to this line, then I think we can see a turnaround in euro, and euro will begin to appreciate. By extension, dollar will lose its ground. Last time I missed natural gas. The reason being is because nothing is happening to natural gas, and I'm not covering oil or gold in this video because we have a trade going for each one of those. So right now you can see a couple of alerts that were in January and actually in December of last year and in January of this year, and you can see a beautiful move in our favor. But right this instant, natural gas is really not doing anything. It hit fresh lows here just in April, but right now what I'm looking for is a rally towards the red line, which is at 3.37, and then we can look for an opportunity to sell it, to short it. I don't see a turnaround in natural gas prices yet. Let's look at Bitcoin and various cryptos, and this is my actual position. I opened, this is on Coinbase, by the way, Bitcoin versus US dollar on Coinbase. And just recently I opened on 6th of May, and now it's doing quite well in my favor. So it looks like Bitcoin has turned around, and I think Bitcoin could continue significantly higher. We'll see if that actually happens, but it does seem plausible that cryptocurrencies are now turning around and will continue higher from here. Same goes for Ethereum. Notice the narrowing of the trading range again. You can see before just a huge distance between the green and yellow line of 63% here, and right now the distance is only, I'm sorry, if we go up, if the distance is different than if we go down. Okay, so yeah, so the distance back here was 177%, and distance currently is 120%. So big difference. That means that right now we have a narrowing of a trading range, and once again, if we have a narrowing of a trading range, usually that means that there is a easier, it will be easier for the price to get up to, in this particular case, bullish levels at $216 and then continue higher. In other words, a trend change will occur. Alright, that's it for today's recap. Please head over to MasterChartsTrading.com, click on Alerts and Indicators, and sign up for one of the services. If you sign up for alerts, you will get various alerts that I send to my subscribers about the various securities we trade. We trade a lot of stocks. We also trade commodities, gold, and cryptos. And you can see also position size and an in-depth weekly discussion video. So do sign up for alerts. If you just want the indicators and you want, I'm talking about these lines on the chart, you can have them for yourself on TradingView.com. You can also look me up on TradingView.com, and I am there at MasterCharts. And here's that script that you can have on your chart. And for that to happen, you just need to sign up for trading indicators, or the best thing to do is sign up for trading indicators and for alerts. And the deal is a killer deal at $34.95, because each one of separately of them costs almost over $50, and you're getting both for $34.95. This price will go up pretty soon, so do sign up soon. Okay, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye-bye.